This video is about one of the key things you need to be aware of if you're investing in overseas companies. So what we're going to look at is an example of buying a company that's denominated in a currency that's different to the base currency of my account. And we're going to explore some of the currency effects that can create. So do keep watching to the end of the video so that you get to hear all about that. Hello, I'm Peter Martin with Trading 212, and we add educational videos about the financial markets, about investing and trading to YouTube on a regular basis. If you haven't already, make sure you subscribe to our YouTube channel just by clicking on the red subscribe button, because that's the easiest way to find out whenever we've uploaded fresh content. Well, Trading 212 offers a wide selection of shares and exchange-traded funds, ETFs, and the selection available crosses a number of different countries. And that can mean that you might, depending on what you buy, end up buying companies that are denominated in different currencies. Now, on the one hand, that kind of diversification can help to spread your risk, but at the same time, it does mean that you may be exposed to fluctuations in different exchange rates. And that's what we're going to be exploring in this video. So let's begin by looking at an example of buying a US company. Here we are in Trading 212's web app, and I'm in the investing part of the app with the chart open for American Airlines, which, as you might surmise, is a US share. Now, if we want to check a little more information about this stock, we can just click on this eye icon up in the top right-hand corner, which gives us the instrument details. So the information panel appears on the right-hand side, and we can see the instrument name here, the name of the share that we're investing in, which is American Airlines, as I said, and we can see that it trades on the NASDAQ, and perhaps most crucially to what we're talking about, that the currency that the share is priced in is US dollars. So what I'm going to do is just open a detailed trade box, so we can see the share is trading there, $31.39 for us to buy. Number of shares, it's got 40 here. If I buy 50 shares, roughly that's $1,500. I'm going to do about 75 shares. We can see that says the amount, the equivalent amount in sterling, because my account is not denominated in US dollars, it's denominated in pounds sterling. So it's saying it's going to cost me £1,827. And we've just seen that number change. That's because there has been a fluctuation in the exchange rate. I'm happy with this deal, so I'm going to click on review order and then send my buy order through. And my order has been executed. So I have now invested my money in buying those 75 shares of American Airlines. So let's just work through some numbers now for our example of investing in American Airlines. So I bought 75 shares of American Airlines at a price of $31.40 per share. So my investment cost in US dollars is those 75 shares multiplied by the price of each share. So it's 75 multiplied by $31.40. And that gives us a number of $2,355. That's the price in US dollars, but my account isn't denominated in US dollars, so we don't stop there. So the cost of the investment is $2,355 US dollars, but my account has sterling as a base currency. So what we need to do, we have to convert that amount into British pounds to work out what I actually pay. So if the exchange rate of GBP to USD is, let's say, 1.2885, then the cost to me, the amount I'm going to pay in sterling, is that US dollar amount, $2,355, divided through by the exchange rate of 1.2885. And if you work those numbers through, the amount I pay then is £1,827.69. And if we go back now to the app, what we can do, if I go up here to my account and click on history, we can see that I bought 75 shares of American Airlines, and I was filled at a cost of £1,827.69. And so, as we saw in the app, the amount paid for my 75 shares was that £1,827.69. Another point worth noting is that the amount paid in commission was nothing, and that's because investing with Trading 212 is commission free. So one extra wrinkle that we introduced into the investing picture, and you'll notice that from the calculations that we just ran through, was the exchange rate of the pound against the dollar. And that's going to continue to play a part in the investment for as long as we hold it. And that's because for our holding in American Airlines, as the value of each share of American Airlines changes, then it naturally follows the value of our investment changes, but in US dollars. And at the same time, of course, the pound against the US dollar, the exchange rate there, may be fluctuating. And therefore, our profit and loss is influenced by the FX rate of the pound against the US dollar. So let's illustrate this by expanding our example now. So let's say that alongside my holding in American Airlines, I also buy a similar sized holding in Sainsbury's. Let's say that I buy 886 shares in Sainsbury's at a price of 206.3 pence per share. So my holding in Sainsbury's is 886 shares multiplied by 206.3 pence per share. And if you multiply that together, you get this number here in pence, which if you then divide through by 100, you get this amount in pounds. So it will cost £1,827.82. And so if we compare the cost of each holding that I've taken, I've got 75 shares in American Airlines, and that cost me £1,827.69. And then the cost of my 886 shares in Sainsbury's was £1,827.82. So a very similar cost for each that I have bought. Now, let's say that I hold on to both these positions for a good few years and that they both do very nicely. To keep things nice and simple, let's say that they both double in value. Now, the calculation for Sainsbury is the simpler of the two, so let's look at that one first. So the profit on Sainsbury, my selling price is going to be 412.6 pence per share. That's twice the price I bought it at. We said it doubled, so we bought it 206.3, doubles in value, and we get 412.6 pence per share. So my sale value is my 886 shares multiplied by that price, which gives us a number of £3,655.64, rounding it to the nearest pence. Now, my opening cost was £1,827.82. If we subtract that away from my sale price, then we arrive at my profit, and that is this same number again, £1,827.82, which is what we'd expect as we doubled our value of our investment. And now let's move on to look at the profit on the American Airlines position. The opening price, if you'll remember, was $31.40. So if we're saying that the share price has doubled in value and that we're able to sell at twice that value, then our selling price is going to be $62.80 per share. So the value of the sale is the 75 shares that was the size of the holding multiplied by that price per share, and that gives you a sale value of $4,710. Now is where it gets a little bit more complicated than it was for looking at the Sainsbury's position, because now we have to consider what has happened with the exchange rate, with the pound against the dollar FX rate, to work out what our profit has actually been in sterling. So let's look now at two different scenarios. Scenario one, let's say that the pound against the US dollar exchange rate rises. And scenario two is that it falls. Now, I've gone for quite wide fluctuations. That's just to illustrate the point, to make the effect more apparent. But let's say that in scenario one, the exchange rate rises to 1.46, and that in the second scenario, it falls to 1.18. So our sale value was $4,710. In scenario one, we divide through by 1.46, and that gives us a sterling sale value of £3,226.03. In scenario two, we divide through our sale value by 1.18, and that gives us a sale value in sterling of £3,991.53. If you remember, our purchase cost in pounds was £1,827.69. So we just need to subtract that from our two different scenarios to come up with a final profit. So in scenario 1, our profit in sterling was £1,398.34. In scenario 2 is £2,163.84. So let's finish then with a final comparison of those sample numbers. With scenario 1, when the pound against the dollar rate strengthened substantially, we made £1,398.34. With scenario 2, when the pound significantly weakened against the dollar, we made £2,163.84. And with our Sainsbury's position, which I've labelled here as the control, we made £1,827.82 profit on an initial outlay of that same amount. So with scenario 1, we made less with a position that was ostensibly the same size investment as that Sainsbury's position, because our profit in dollars was diluted from our sterling perspective by the strengthening of the pound. With scenario 2, we made more because our profit in dollars was magnified in terms of what it meant in pounds by the weakening of the pound to the dollar. So as you can see, the effect can be substantial. It's not necessarily a bad or a good thing. It can count against you or count in your favour, as we saw from our example. The most important thing is to be aware that this currency effect can arise. And of course, if you are concerned about being exposed to these kind of fluctuations, you can take steps to mitigate it by hedging your exposure. Well, I hope you enjoyed this video. If you did, please take a moment just to hit the thumbs up button and give us a like. And why not share your thoughts with us on the subject by sending us a message in the comments section. We do read each message we receive there. But that's all for now from me, Peter Martin, and Trading 212. Thanks for watching. I'll see you next time. Goodbye.